Hello, and welcome back to the Macro Gamer channel. My name is Mark Hassingham. Today we're going back into our Shield Portfolio's weekly numbers. This is for week 55, and this is as of Saturday, August 9th, 2025. So it's our weekly numbers. So again, this is for our Shield Portfolio. So what I call the Weapons of Finance, which is both my portfolios, the Shield and Sword. This is the breakdown of the strategy of the Shield. So this is our primary portfolio, right? It's our defensive strategy. It's focused on preserving and protecting wealth, getting continuous and stable returns, utilizing balanced diversification with global economic resilience and dynamic management. So this is kind of how we go through our portfolio week by week, kind of our philosophy for it. So it's the weapons of finance strategy, right? The overall strategy, and this is the Shield. So we have our portfolio's net worth at $701. We have a total gain of $57.89, and we have a money-weighted total return of positive 16.56%. So we have our portfolio weekly data for week 55. We have a net cash flow of $30 right here on August 6th. So $30 deposited into the investment account and then bought our assets based on our target weighting. We have a market gain of $5.80. And we have no dividends earned, so we have a total gain of $5.80. That gives us a money-weighted return of positive 0.85%. So it's our weekly return for week 55. Then we have our monthly data for week 55. This is going back to July 8th till today, April 9th. We have a market gain of $12.16. We have dividend earned of 31 cents, which gives us a total gain of $12.47. And our money weighted return for that time period is positive 1.90%. So this is our monthly data for week 55. We have our quarterly data for week 55. We have, I didn't go over the two deposits, I apologize. We have the July 16th deposit and then the August 16th deposit. That's our net cash flow. So two $30 deposits over that month for week 55. Now quarterly data for week 55. This is from May 8th, 2025 till today, August 9th, 2025, with net cash flow of $151.32. So there's three $30 deposits. You have one here, one here, one here, one here, one here. Every third week, $30 gets deposited into the account. So $150 over that time period, over 3 months. We have a market gain of $22.25. We have dividends earned of $1.12, which gives us a total gain of $23.37. We have a money-weighted return over that time of positive 3.88%. So this is our quarterly data for week 55. Shit's out of the way. Oh my god. Here we go. Now we have our yearly data, my most important chart. This goes back to August 8th, 2024 till today, August 9th, 2025. So a full year. We have a net cash flow of $547.10. So you see the stair-step pattern every third week. You see that stair-step pattern. $30 gets deposited. So you just follow it every third week, every third week, every third week. So you just get auto deposits. That's where the net cash flow comes from. Over that time period, we have a market gain of $55.72. We have dividends earned of $3.04. which gives us a total gain of $58.76. And over that time period, we have a money weighted return of positive 16.15%. So as I say every week, pretty much every week, the goal of this portfolio is to have an operational performance on a yearly chart of between 5 and 10%. And then a optimal performance is anything over 10%. So we're at 16.15, so we're over 10%. So our performance right now is optimal, which is what we want. Then we have our all-time data. This is everything from the beginning, July 19th, 2024 till today. have a net cash flow of $646.50. So you have our initial $100 deposit, and then all the $30 deposits that came after that. Over that time period, pardon me, we have a market gain of $54.50, and we have dividends earned of $3.39, which gives us a total gain of $57.89. This gives us a money-weighted return of positive 16.56%. That's our that's our all-time data for week 55. Then we have our weekly percentages for week 55. So on the right, and this looks slightly different because again, whenever they do a update, to the website, they change some things, make some updates, so it looks slightly different, but it's all the same setup. So on the right, we have our target weighting. So gold still at 45% with our GLD ETF, bonds at 15% with our GOVI ETF, commodities at 15% with our USCI ETF, US dollars at 10% with our UUP ETF, stocks at 10% with our RSP ETF, and Bitcoin at 5% with our IBIT ETF. I'm sorry. So we have our weekly percentages for week 55. So we have our gold up 1.29% for a gain of $3.96. So a bit of a pop there in gold. That's nice. Bonds down 0.41% for a market loss of 42 cents. Commodities up 1.04% for a market gain of $1.05. US dollar down 0.51% for a market loss of 35 cents. Stocks up 0.80% for a market gain of 54 cents. And Bitcoin up 3.01% for a market gain of $1.02. So our weekly percentages. And now our monthly percentages for week 55. So gold up 2.94% for a market gain of $8.66. Bonds up 1.63% for a market gain of $1.61. Commodities down 0.44% for a market loss of 44 cents. US dollar up 1.18% for a market gain of 77 cents. Stocks down 0.55% for a market loss of 37 cents. Bitcoin up 7.02% for a market gain of $2.24. That's our monthly percentage for week 55. We got our quarterly percentages for week 55. Gold up 3.24% for a market gain of $8.87. Bonds up 2.01% for a market gain of $1.83. This one's actually kind of surprising that bonds are actually up for the quarter. Commodities up 6.03% for a market gain of $5.28. It's not bad. US dollar down 0.97% for market loss of 60 cents. Stocks up 6.27% for market gain of $3.69. And Bitcoin up 14.88% for market gain of $4.30. That's our quarterly percentages. Now our yearly percentages for week 55. Love my yearly percentages on my charts. So gold up 33.91% for market gain of $41.75. Bonds, we don't have a full year. This only goes back to February of this year. So we'll skip that for now, but we'll go over in the charts. Commodities up 16.81% for a market gain of $9.48. US dollar down 9.04% for a market loss of $5.25. So the US dollar still looking like shit. Stocks up 3.51% for a market gain of $1.69. And Bitcoin, this IBIT ETF, which has only been around since September of 2024, but it's up 90.32% for a market gain of $12.45. So Bitcoin being crazy. And then our all-time percentages. So this is since portfolio's inception. So since week 50 or for week 55, we have gold up 35.89% for a market gain of $42.04. Bonds, again, we don't have full data, so I'll skip it. USCI commodities up 16.23% for market gain of $8.90. US dollar down 9.62%. for a market loss of $5.41. Stocks up 3.26% for a market gain of $1.51. And Bitcoin up 90.32% for a market gain of $12.45. So all-time data, right? Then we have our position changes, which we have not had a position change since April 30th, 2025. Keep talking about how I'm going to reduce gold's position, but gold's still holding. It tapped, I believe, 3,500 for the first time this week. So like all-time highs, all-time highs. So we haven't changed anything. We have portfolio transactions. So here's that $30 deposit. As I said earlier, on August 6th. So $30. So of that $30, we bought $12.99 of gold, $3.29 of bonds, $3.29 of stocks, $1.82 of Bitcoin, $3.64 of US dollar, $5.19 of commodities. So that's how the $30 got spread out amongst the different assets. Then we have our Illuvium staking for week 55. Illuvium price has come up. It's at $19.37. There was like a game tournament. I think it was like a big prize pool. So that kind of gave it like a little pop in the price. I don't think it's long-term sustainable, but gave it a little pop in the price, which is nice. So currently we have 24.29 ILV staked for a current market value of $470.54. This is our Illuvium dashboard. So our ILV is doing good right now at the moment. We have our vesting schedule. So we have our first unlock here, so we can withdraw it whenever we want. But as long as we have it staked, we can still get rewards. So we're just going to leave it in there for right now. Then we have all the other stakes. And we have our second page, all the other staking, vesting. And then we have the most recent one on the third page, which was from July 29th, where we staked 2.67 ILV and unlocked 354 days. We have no new revenue distribution. We have the original 3 revenue distributions that equal all 3 together 0.024 ILV, which is current market value of 46 cents. We have no Illuvium transactions. And that is our weekly numbers. So now, as always, we go into our charts. So we have our gold ETF. Pardon me. So as always, gold going back to October 2023. Show it every week. Just in a strong bullish trend, and broke out in April 10th, April 9th. Post Trump's 90-day pause, it shot up and it stayed above this upper green trend line, but it also hit this red trend line. Keeps tapping it multiple times. So we have 1, 2, 3, 4, and we have 5 taps. Right? Maybe we can draw arrows on that, just so people kind of see it. Which one's arrows? Oh my god, I'm gonna figure this out on the fly. Arrow, sweet, perfect. Right there. Okay, I'm gonna do that. Editing on the fly, people. Editing on the fly. Look at this guy. Where'd you pop up there? I guess that's where. Oh no. There. 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 That's what we're looking at right now. So tap, 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 tap. Right? Tapped it 5 times. So I know what's gonna happen, right? We're still overall in the strong uptrend, but we keep tapping this red line multiple times. Right? So we're just gonna have to wait and watch. Like I said, we hit 3,500, I believe. So if you go to our watch list, go where you at? Month. Oh, maybe it was previous week. My mistake. Thought we hit it, maybe we didn't. Or maybe it's on a different watch list. But anyway, gold's still at all-time highs, so we're keeping it 45% for now until otherwise, but this multiple tapping of the line is getting concerning. It's having a hard time breaking it, so we'll see what happens. We have our commodities. Look at it on a 5-year chart, doing great since the beginning of the COVID pandemic. We have the slower trend here where it was bouncing around for a while. It popped up into this upper trend, so I drew the lines all the way back to the previous highs of May 2022. and then broke out now. So it's still in this upper trend channel. Popped around a couple times, but still in this upper trend channel. So it hasn't gone down yet. So commodities still doing good. Gold still doing good. All right, bonds, fucking bonds. Okay, so this is actually interesting. It's starting to pop up again. It's a 5-year chart going back to the beginning of the pandemic. So bonds have been just a shitty investment, but kind of bottoming around this area. So now we came up a little bit. So hopefully, because the 10-year yield is coming down, where's that 10-year yield? It's kind of out of this range now. So I was drawing this range. If you go back, this goes back to July 2020. So just, yeah, so April, we'll call it April 2020. So basically right around the pandemic. So rates have been going up, and then it kind of peaked here back in October of 23 at around almost 5%. And then it's just kind of been bouncing against this line, you know, kind of same thing as before. We could do these arrows. There's one right there. Right there. Right there. Oops. Don't do that. Right there. And I guess that's it. Delete that one. So same kind of situation. Hitting this line, hitting this line, hitting this line. Just waiting to see what happens. It came to this little cross right here. It looks like it broke down just slightly. Just slightly broke down. But still started to come back up. So we're going to see what happens. Of course, the yield is going to be the inverse of our asset. So we're going to watch it. Continue to see what happens with bonds. US dollar, still not great. Still a horrible investment. Barely staying above this red line, this downward trending line. There's a green line. I should just fucking delete it at this point. So it came up, and then it's just come down right at that line again. So this downward trend is not good. And then if we look at DXY on a really long-term chart, you can see, here we go. So back to March 2008. It's kind of been in this trend. I can move the line up a little bit. Looks like it's missing a lot if I do that, but that's fine. Just so people get it. So up and down, up and down, up and down, and then here we are, hit that line, and then it's starting to come back up. But then the 100 level, because you know it's a big round number, hit that, bounced off it, so now it's kind of bouncing around it. So it looks like it might be sustaining this uptrend, but we'll see as it keeps going. But as of right now, it's like dropped like 10% in a fucking year, so it's not doing good. Our stocks, so still trying to reclaim this trend, this upper trend here, but so far hasn't. Hit its all-time high back July 24th. So the high from November 2024, the end of November 2024. So I hit that, then it came back down. But if you look at the S&P, you know, we're like at all-time highs pretty much. Let's see. There we go. Yeah, we're almost at right around all-time highs. We basically peaked at all-time high at the end of July, then we came down, corrected, but we're still up there. And we're just going to see what happens with the S&P 500. Remember, the S&P 500 is concentrated within like 7 stocks where I buy the equal weight. So that's why my performance is going to be different from the S&P 500. But it's going to also have the top 500 companies just equal weights them. But we're damn near all-time highs with this. So stocks trying to do good, trying to hold. The Bitcoin kind of stuck around this level now. This IBIT has just been kind of rounding off. It hit this peak and it's been kind of coming down. But if you look at the current price, you know, same thing. I show the long-term trend. So hit the different peaks, 2017, 2021, 2024, 2025. And it kind of broke out of here, but it's kind of just, you know, staying here. It's not doing a whole lot. You know, maybe it's peaking around the 120. You know, it's not breaking that level yet. Maybe I should put a line on that. Let's put a line on that. Let's put a line on it. Give people something to look at. There we go. So waiting to see what happens at this 120 level. It looks like on a 5-year. There we go. So we'll see what happens. As of right now, it looks like it's kind of just going through this wedge pattern right here. So we'll see if it breaks it or not. But anyway, those are our weekly numbers for the Shield portfolio. So now I do both portfolios. So I'll do the Sword portfolio a little later, and you'll get the week number 4 update of the Sword portfolio. And now you have the Shield and the Sword, the Weapons of Finance, 2 different strategies. This is the defensive strategy. So going for continuous and stable returns. Where's it at? Where's my thing? It's our primary portfolio. We focus everything on this portfolio. It's our most important one. Here we go. It's a defensive strategy, so we're not focused on offense. We're not aggressive with this portfolio. Reserving and protecting wealth, so we want to not just make money, but keep what we have. Continuous and stable returns, so that's like what I talk about, the 5 to 10% operational performance. And then anything greater than 10% is optimal performance. So we want continuous stable returns. So that 5 to 10%. Anything above 10% is bonus. Balanced diversification. We've got gold, bonds, commodities, stocks, right? Different things in our portfolio. Global economic resilience. With all these things happening in the world, this portfolio just continually and stably moves upward. And then the dynamic management, anytime I make a trade or whatever, I'll put it in the slide deck here and you'll know about it. But it's basically the overview of this week 55 for the Shield portfolio. So as always, thank you for watching. If you have any questions, comments, or criticisms, let me know. Have a good day.